Hey everyone, Dan here. We're a few minutes after market close on Friday, July 30th. We're going to take our daily look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your own decisions based on that information. All right, so SoFi dropping down a little bit over 1% today. Volume continuing to peel down quite a bit. Now, granted, it was a Friday. We are on the daily chart here, so we could see what the volume was on the 23rd. It clocked in at 10 million, so we're about 4 million off pace of that today. If we look at the 16th, we had 13 million. So quite a change in volume today. I don't know if some of that is from volume jumping into Lending Club, Robinhood, what have you, sort of being in similar space and having maybe what is seen to be more exciting news at the moment. Now, today we're mostly going to focus on the chart. So we're going to take a look at the daily, see what we might be looking at there for any indications or anything that's coming up, and then we'll zoom in and we'll take a look at the 5-day to get a sense of, on the shorter term time frame, what we might be seeing as we lead into next week on sort of more day by day basis. And on the data side of things, coming up next week, I'll be doing a video that's just focused on the potential for what could be seen, I think, as a really positive earnings outcome and what I think would be received as a very negative earnings outcome. Because there's different factors that are going to play into SoFi's earnings, I think, versus something like you saw with Amazon yesterday, where it's just like, oh, they missed this, and now the world is crumbling. I think SoFi being in the stage that it's in, coming on board, meaning coming to the market via SPAC relatively recently, I think there's going to be some different ways in which the market judges or perceives what's reported on their earnings call in the coming weeks. So I'll walk through that next week. And then also, as things start to kind of settle in with Robinhood and Lending Club, we'll do some additional competitive landscape analysis. I did a previous video on competitive landscape analysis focusing mostly on, well, you can just go look at it to see what was focused on in that video. But I briefly touched on Robinhood in that video, but obviously it hadn't come to market yet. I didn't touch on Lending Club at all in that video. So that competitive landscape, I'm seeing it as sort of a not a moving target, but kind of like a little series that we'll do periodically in order to kind of look at the different competitors that SoFi has. I may have mentioned in that video that one of the interesting things to me about SoFi obviously is the various areas in which they are going to compete with other players in the space. But the interesting thing is I think they're going to have a lot of semi-competitors, right? They're going to have a lot of competitors just in the loan space, competitors just in the brokerage space, competitors maybe in the crypto space, or in a different way in the crypto space. And so I think as they start to execute on their big idea of what SoFi is going to be, they're going to pick up, little bits and bobs, dribs and drabs, whatever, of competitors along the way, because they compete with that company who is more focused on just that thing, whereas SoFi will be just a portion of their overall business. But that's how I sort of saw that competitive landscape thing rolling out. So I'll be touching on Lending Club and Robinhood in the coming weeks, and then also doing a deeper dive into the bank charter. Now, obviously, we talked earlier in this week. You can see my SoFi plus Gemini video to, if you haven't yet, take a look at that. That was sort of rumors that were coming out, this Gemini sub merger Inc. entity that all of a sudden was included in the Federal Reserve documents for the bank charter that SoFi is trying to have approved, and speculation around if that's Gemini, the crypto platform. And that's still sort of up in the air as far as I know. I didn't do a bunch of looking into it again today, but sort of the questions around there and sort of what that will look like. But, go have a look at that if you missed that one. But, coming up, we'll be talking about the bank charter and how that could be perceived as a catalyst as well. And so these are sort of like the data videos that we'll have coming up, focused around earnings, focused around competitors, and then focused around the bank charter. And then as additional dominoes continue to fall, meaning, they build the business that they're trying to build, then we will tack on additional deep dives into those areas, or maybe not deep, but we'll tack in dives into those areas. But just to let you know that that's sort of what you can look for down, say over the course of the next few weeks. For today, I'm going to, like I said, focus in on the macro and the micro chart, and then just kick things off by saying I still think that we have this strong potential for a solid hype run-up to earnings. I don't know if that's going to play out or not. There's a few indications that I see in the chart that I'll point to in a minute. There is sort of the sentiment from the historical things that we've seen, meaning like this area here, we see, IPOE as it was getting set to merge with SoFi. So in that way, people knew that it was SoFi that it was going to be merging with. There was a lot of hype that led up to that, and that hype sustained for a few days. So it has shown that it has hype potential in the recent past, and I think a bunch of that was fueled by that earnings that came out just before the merger. I think that really kickstarted or poured some jet fuel on the bonfire that was the hype around that merger finally completing. So because that was a big driver of that, and it has shown the ability to hype in the past based on earnings criteria, that to me sort of gives us at least the possibility that there could be a run-up to earnings. Also, not to mention, even though I wish I didn't have to mention, this immense and painful sell-off that SoFi has gone through for really on minimal news, right? There was the end of June lockup expiration and some selling pressure that came in because of that. And then other than that, there hasn't really been, there have been articles predominantly that have kind of talked about, is this a $10 or a $20 stock? And just talked about how, SoFi is too unbalanced in order to be profitable in the way Wall Street would want it to be, yada, yada, yada. But there hasn't been anything really that's fundamentally changed with this huge sell-off. Now, granted, you could say this run-up was an overreaction, but then you would have to, I think, honestly say that the sell-off was also an overreaction. And so if we look at going into earnings in situations where people say good earnings or a good outcome with this earnings call is priced in, I don't think that that's the case at all for SoFi. I definitely don't think really good earnings report is priced in based on what we've seen since the merger completed. And so for those reasons, I'm still a big proponent of the idea that we could run up ahead of earnings. I took several new positions today. I think I tweeted it, but I can't recall off the top of my head. I think 40 shares, which isn't, a ton. At least it's a relatively cheap stock at the moment. But I also then grabbed 17 call options, all of which were around the earnings date. Some for August 13th and some for August 20th. And I also have my leap options that, I talked about. That is for January of 2023, looking to add to that position as well. And those call options centered around the earnings. Obviously, the one for the 20th that I might consider holding through earnings, the ones leading up to the earnings date, meaning on the 13th, and then, having that very tight timeline between when earnings happen and then when the option expires. That one, I will probably be hoping that my idea that the hype is coming and that the run-up based on the hype is coming plays out, and I could exit those positions ahead of earnings so I don't get hit with the IV crush, which if you are planning on playing options around SoFi or any other company's earnings, look up IV crush if you're not familiar with that, implied volatility crush, and just know what happens or what can happen if you hold those options through earnings and why. Okay, so that's what I'm looking for. That's why I took my new positions. Those are the non-chart specific videos that you can be looking at in the coming weeks ahead. If you have additional ideas of areas that you'd like to see videos on relating to SoFi that aren't what I mentioned, competitive landscape, earnings, and bank charter, let me know, and I'd be happy to try to dig in and provide a video for you all. All right, so we're 10 minutes into the video and we're finally going to start the charting. So apologies for that long intro, but I kind of wanted to explain a bit of what's to come and what I did today and why. But here we're starting to struggle in this lower portion, between this 1465 and this 1791 zone, which is where we saw it spend a lot of time here. Now, I flipped this 1791 zone to green and this 1465 to red. And here's why. This is another speculative endeavor, so just keep that in mind. I don't know that this thing is true, but we will know over time. So because SoFi spent so much time between these ranges and then briefly popped out and then returned to this range, sometimes I tend to consider the entirety of this period as range bound, meaning it was basically acting between these two price ranges with a brief exodus that's then very quickly came back down. So it spent 520 to like 7.2 out of here. So it spent about 5-6 weeks out of here. Now in here, it spent from 324 to 520. So it spent almost 2 months. And then since then, it has spent almost another month. So 6 weeks versus nearly 3 months within this 1791 to 1465 range. Now, what can tend to happen as something becomes range bound over a period of time, but has shown to have periods of strong volatility, which if we look back here, these are periods of strong volatility, right? What can sometimes happen, and again, this is speculation, but I'll tell you how we can find out if it's true or not as the play evolves. A lot of times, there will be a bunch of limit buys or buy orders that will be placed above this 1791 zone. Sort of saying if it stops topping out at this price point, I would come in because I would think that we would have a clear sign of strength there and that we would be buying with the trend at that point, that maybe it's broken its downtrend. On the flip side of things, 1465, when it's kind of consistently testing a floor there, a lot of times large orders or a large number of orders will be placed that will trigger a sell below that price point. Basically, folks thinking, okay, if it can't hold this zone, I mean, that zone could be as low as something like 14, to be honest, but I'm saying somewhere in that area, in that vicinity. But folks basically saying, if it can't hold this floor again, or if it starts to make lower lows than we've seen, and at this point we already were hoping that this was the dip and it was establishing a floor and so on and so forth. But if that becomes not the case, I don't know where this is going. I need to cash out then and just wait on the sidelines and see what's going to happen, put my capital elsewhere for the time being. So if that is the case, then if it does fall through here and starts to trigger a bunch of these sells, it would drop pretty rapidly. Obviously, the opposite being true to the upside. If there are a bunch of buy orders just above this 1791 zone, because that's where it's consistently topped out as it's been in this range, then that could trigger a pretty swift, we'll say, run up over 1791 or maybe over 18, right? These are both very close to like $0 figures, meaning exactly 18, exactly 14, that kind of those sort of like psychological targets that people have in their head when they think of just round numbers. And so if that's the case, I'll be looking strongly for swift moves in either direction if it happens to break either this 1791 resistance or this 1465 support. Obviously, I'm hoping that we move over the resistance zone and establish that as supports. And if we do, then if there's some buys there that get triggered, then that would be obviously awesome. Now, the thing that is still concerning to me is the volume side of thing. I don't know where my volume went here. We'll get it back. All right, so we see ever since the unlock happened here toward the end of June, there's been this relatively continuous down drip of volume. So, and today we see really the smallest volume since almost since the merger, but certainly in the last month, we'll say, to be safe. We're seeing the smallest volume since then. So I don't love to see the volume continuing to roll down. Again, I don't know if that's because folks are putting their fintech money or what have you into Robinhood, Lending Club, what have you, because they have maybe more exciting things happening at the moment. But I am really keen to see the volume start to pick up, and obviously I would like it to pick up to the bullish side. To me, that's the most needed factor at the moment, is where is the volume, right? It's sort of the question. Now, on the daily, this MACD still has its bullish crossover. It's still gaining in strength. So the MACD here is on a minus 1.01 and here a minus 0.97. So that is still continuing to move up, continuing to ever so slightly, but still increase the real estate between itself and the signal line. So as that continues to happen, that could point us to continued strength and would be, to me, a good elevating factor for any potential to run up ahead of earnings. Now, the RSI, not much new to see. I mean, nothing new to see here. Obviously, I'm still waiting to see what it does when it hits this midline, right around 50 on the RSI. So we're still waiting on that. The MAs, we did see the daily candle bump its head and reject off of the 20. We talked about that yesterday. Today, it wasn't quite able to approach it. We'll zoom in a couple minutes and talk about why. But still in a bearish formation here. But if we can swing, or if this 20 can continue to come down to us and provide support, it could give us the lift that we need. We have seen that happen in the past. Over here, when it made its big run up, it came down, touched it, gave it a nice second lift off, and then tried to support it for several days before it dropped through. And also when it started this big swing up, obviously there was quite a bit of distance there, but it did bounce off of it once, tried to give it a second lift, and then it couldn't hold it. So it has shown periods of time to sort of lift the price with it once it can be established as support underneath. So I'm really going to be looking for that. Now, let's zoom in and sort of see what we can glean from this week that might help inform us for next week. Here is we had put this red area in last night because I had basically said the thing that I'm most concerned with at the moment is the topping out that's happening here. And if we continue to top out, I worry that there's a sell-off coming, that we're not going to be able to break through that as quickly as we would need to in order to prevent a push down from that. So obviously that's what was happening when I was making the video, was it was pushing down from that zone. But I was most curious to see what we did when we approached that again. And obviously you see today we approached that exact same area again, and just those wicks sadly trying to push themselves up and out of it. You see even the wicks kind of downtrending here, making some lower highs along the way, and then it just wasn't able to breach it. And then it was just sort of a slow little drain down throughout the day, something that we've seen several days, to be honest, right? It sort of tops out and then just slowly kind of drains down throughout the day. This was a relatively good day. Well, this was not a slow drain down throughout the day, but the past couple of days, we've really seen that attempt up and then a slow drain down. So that's the thing that's, again, causing me the most concern. But as or if SoFi makes another run at this area is right about 1572 to it's just like 1570 to 1575, say. If it can establish support over that, it really should unlock the capability to make a run up, just to, like, make an attempt to establish support at $16. That would be my expectation there, that there's pretty solid run room between 1575 and 16, which obviously isn't that much, but we'll take what we can get at this point to the upside, I think. And that's what I'm going to be watching most closely for as we get into next week. Now, the other thing that I think we need to make sure that we can break here is this peaking out line that keeps happening here that keeps trapping all of this price activity. So I would keep an eye on this just to make sure. I mean, I hope that we're not opening at like 1530s or 15 and a quarter on Monday, but we'll see. But I would really like to just make sure that we can get out from underneath this downtrend line, that this doesn't get out of control. Because again, if we do get trapped under this on Monday, that's pushing us toward this purple bounce zone, which is in the 14s again, and would obviously be not the direction that I'd be hoping that we'd going as we get closer and closer to the earnings date. And so, yeah, to me, next week should be fairly telling, because it'll start, especially later in the week, it'll start to be feeling like that's expectation, or if there is expectation or hype around earnings, it should start to unfold, I would think, next Thursday, Friday, and see if there's any increased volume, any increased buy volume, especially anyone who seems to be coming in with expectations. And then they could sort of undo a bit of what we talked about earlier, where we talked about that obviously good earnings aren't currently priced in, I don't think, anyway. I'm sure there's folks that'll disagree, and you'll see them in the comments, but that could start to change, right? If there is a run up and we get to 18, 19 ahead of earnings, because folks are like, wait a minute, there could be something great here. They had great earnings last time. They still have a pretty low user base based on their last report, which was, I think, 2.5 million. And so there's a ton of green fields out there for them to accumulate numbers and usage from. And so in that way, folks might jump in expecting that they've done a lot of work in order to button up a bunch of these places, or at least get increased usage or increased volume in those areas. So that would be my hope. That's sort of like what I'd be looking for early and late next week. Now, on the shorter term time frame, obviously the MACD doing things more quickly and continuing to flip and flop. Now, the bearish momentum as we take it today versus cumulatively from the last several days, it still is kind of matching par day over day over day for the last couple of days with its strongest momentum. In other words, the bearish momentum here is pretty on par with here, which is pretty on par with here. So it's kind of holding steady there. But what I'd like to see it be doing, obviously, is just decreasing. That said, it hasn't shown the ability to kind of increase and increase and increase. What it's more shown the ability to do is increase strongly and then get smacked back a bit with some bullish momentum, and then the bearish dies down briefly, and then bearish momentum comes back strong, dies down, gets hit with some bullish, and then kind of lulls, right? I mean, this is after hours and pre-market, so I don't take that too seriously, but we see that again today, a big bullish effort, bearish counter, and then the bullish momentum came in a little bit to just kind of die down the bearish momentum, and then it's just sort of stayed there for the time being. So I would expect, based on this most recent pattern, we'll be looking for a bullish entry into next week. And also the daily would be indicating that to me as well. But you never know. We'll have to see. Trapped right now underneath the midline, like we talked about, sort of keeping it from being able to run up toward that overbought area, increase the price, get some strength going. So if we can establish over the 50 and the RSI, that would help a ton as we get into next week. Now, right now, kind of catching the 200, which is red here, as a support zone. So that's good to see. And now bumping its head on the 20 with the 50 over. So we have a mixed formation here. We're not fully bullish nor fully bearish. If we can get this 20, which is purple, cross over the yellow, then we would be fully bullish formation, and hopefully we could at least break this trend line and carry on our merry way with a nice volume of 18, 20 million and a 4% up day. I would even just, like, I know 4%, I don't know. To me, 4% at this point doesn't sound like a lot because we've been bled so much, but maybe to some folks, 4% does sound like a lot, which I would also understand. But I would take even a 2% green day with a nice bullish formation, things following the indicators, and the volume up around 16, 18, 20 million, something like that would start to feel really good. I'd be like, is this hypothesis playing out? But yeah, that is basically what I'm seeing for the charts. That's basically what I'm looking at in my own sort of plays and situations at the moment. But I know it was a lot of chitter chatter today, but there was a lot that went on this week, and I took a lot of positions today, and I kind of wanted to explain why. And there's some really big catalysts coming up, right? So I'll try to do a better job of figuring out exactly what the content of the video is going to be, and then situating myself accordingly, meaning if it's going to be kind of a chat through video, maybe I won't have just a screen up and you guys staring at a screen for dozens of minutes. But anyway, I hope your trading week went well. I appreciate you watching. I hope you enjoy your weekend, and I will see you in the next video.